Ivy, it's great to have you back on, and that's exactly where I'm going to start, because you had a beat for the quarter, but they also put forward Q3 guidance, and it looks like maybe some of those metrics, a few of them were shy of street expectations. I mean, last week ahead of this report, you downgraded Lennar. You said you were still bullish on the long term, but that you're neutral right now, and that a lot of this was going to hinge on the guidance and on the growing of those gross margins. Your thoughts today?
Well, first, thanks for having me. I think Lennar had a very good quarter. Our downgrade was more concerned or related to the fact that we thought there really wasn't going to be much upside. We actually were in line with consensus, and the company overall maintained their guidance and had pretty much in-line metrics. Our concern about the industry right now is that we're starting to see seasonally slower than activity for the prior 4 months, ended May. And we're seeing incentives tick up. We're seeing pricing overall flatten out. And we're seeing year-over-year orders declining for our proprietary private builder survey. So I think the publics will have very little upside, and it's going to get harder given the valuations are already at lofty levels relative to history.
So then what becomes the next catalyst for home builders like Lennar and like others? Is it going to be the cutting of interest rates or something else?
I think you're right. I think that we need rates to come down. We need to see affordability improve. One of the metrics that we reported on for our May survey was that the credit overall is showing definitely some cautionary red flags for the consumer. So I think we need rates to come down to make the monthly payment more affordable and consumers to feel like they're getting value.
So, Ivy, you feel the same way about KB that you do about Lennar? Because KB stock has been doing a lot better.
We do, although it's trading at a lower multiple at 1.35 times book, 9 times earnings, compared to Lennar, which is at 1.8, 1.9 times 11 times earnings. It's trading at a premium to the mid-cap group. And I think that what we're looking at is just not enough upside to get people excited given those premiums. And what we saw last week when Toll Brothers reported, although they hit an in-line quarter and they had overall solid results, the stock sold off.
How much benefit does a home builder get from being at the very high end of the market versus closer to the mid-range, considering that the consumers at the high end are feeling less pressure and might be using more cash?
Well, overall, Lennar is more skewed to the entry level, and they actually had a very strong quarter, despite the fact that the lower end is struggling more. So we do agree with you that the higher end is performing better. I'd say that the first-time buyer is where we're seeing probably the most caution. So if anything, KB is more skewed to that buyer too. So we'll see how they do. But again, we're expecting them to be pretty much in line. It's really about the back half of 24. And if we continue to see what is slower than seasonal activity, I think the builders in general will be harder and harder to deliver the results that they're expecting or guiding for.